Star Health and Allied Insurance Company Limited is in focus. The company has announced that it has been granted registration by IFSCA to establish an IFSC international office at the Gujarat International, that is Gift City. The company plans to commence its operation with a branch in Gift City by the end of March 2024. The company will offer non-resident Indians focused insurance that caters to the needs of the global Indian Star Health Insurance, and will also be able to attract foreign inward business as reinsurer. The company will provide insurance for Indians going abroad and India's growing international student community. To discuss this further and to understand the synergies, we have with us Mr. Nilesh Kambli, CFO of Star Health and Allied Insurance Company Limited. Welcome to NDTV Profit, sir.
Thank you.
So my first question to you is that what is the kind of size of market that you're looking at through this particular Gift City branch that you'll be opening, and what are the kind of synergies that you'll expect from this particular expansion?
See, when it comes to international business, we see that this can easily be 4 to 5% of our overall business in the coming years. It's a very big opportunity and it's creating the market rather than capturing the market. There are a lot of NRIs who are wanting to come back to India and who wants health insurance cover so that there is continuity of benefits. We see a huge business potential for this. There is some kind of business which is currently done, but there are a lot of regulatory issues. But through Gift City, it can be seamless experience for the customers. We see a lot of medical tourism in India from Middle East, African countries, as well as Southeast Asian countries. It's a very good opportunity for these patients to come to India, and with Star Health's extensive hospital network, the kind of knowledge and experience that we have, it will be a win-win situation for both the customers as well as for us. So we see a big opportunity when it comes to the Gift City operations.
Right. And what are the kind of margins that you'll be expecting out of this particular branch? Will it be margin accretive? What do you think?
Yes, absolutely. So in terms of margin, yes, definitely it will be, it can operate anywhere between 90 to 94% combined ratios. It will give a healthy 5 to 6% margin, as well as the cash inflows, which will help in generating the investment income. So it will be in line with our existing business operations.
Right. And what are the kind of loss ratios that you're aiming at from this particular portfolio?
See, it depends upon the kind of business that we are writing. The retail businesses should operate at a lower loss ratio. When it comes to reinsurance inward business from foreign countries, the loss ratios will be higher, but there will be no operating cost or the cost of intermediation. So based on the kind of business as well as the the kind of customers that we write, it will be a combined ratio that we spoke about.
Right, Mr. So, Mr. Kambli, I have a more macro-based question. Well, the IRDA has issued final regulations for Bima Sugam, right? How will this change the landscape of insurance sector, in your opinion?
Yeah, it's a very good question. See, what the IRDA is looking at, it's looking at affordability, availability, and accessibility of insurance to the population of India. When it comes to health insurance, India continues to be an underpenetrated market. So what the regulator is doing to Bima Sugam is it is creating accessibility of health insurance by creating an online platform. It's ensuring that the insurance is available to the end customers. It will also have a service infrastructure. Health insurance has suffered a lot because of the lack of customer trust. So through the service infrastructure, where the hospitals will also be on the platform, the digital health records of the customers will also be on the platform. There will be an elimination of customer distress in the industry. The rejection, the delays in settlement of claim through anywhere cashless facilities, which will also be available on this platform. So it will create availability, accessibility, as well as affordability of customers. Insurance is a law of large numbers. As more and more customers get into this platform by health insurance, it will also lead to affordability of health insurance. So it's a very big objective, forward-looking, and it will ensure that the health insurance will have a long runway of growth over the years.
Right. But in terms of Star Health Insurance, do you think that because of this, there will be some kind of market loss, share of market loss?
No, absolutely not. Health insurance continues to be a push product. It requires a lot of customer engagement. That is why till today, when it comes to health insurance for retail customers, 72% of the business is through the agents. For us, it's close to 82%. So the agency, the intermediaries will also be on this platform, which they will engage with the customers, which will create transparency as well as it will be, help in expanding the market. So we believe that it's a very good opportunity for a player like Star Health, which has a huge distribution network, to further its growth targets.
Right, but from what I understand is that Star Health has been losing its market share. So do you think that this will further add on to losing the market share, or it will benefit you?
So I'd like to clarify, today Star Health has around 33% market share. It continues to grow in line with the market. So last year we had 34%, 5 years back we had 26%, 2 years back we had 31%. So we continue to improve on the market share. This year it's a year of transition where we had taken a base price increase. So for this year we are growing in line with the market. But the kind of changes that we have done with the focus on quality business, last 3 months have been really good for us, and we see a big runway of growth in the coming years. We'll maintain our market share or continue to improve on our market share going forward.
Right. And Mr. Kambli, can you guide us on loss and combined ratios for FY25? Because the risk that is reigned in will, see loss ratios come off. So what is the guidance for FY25 then?
Yeah, so I'll not like to give a guidance on the combined ratio, but the initiatives that we have taken, focus on quality business, we see very good results. The price increase that we have taken is showing good results. Jan to March is our biggest quarter. Okay, the price increase benefit in terms of earned premium will continue to flow in 24-25. The kind of changes that we have made in our EOM structures, all that is paying up really big dividends for us, and we see that the normalized financials will be, the normalized PAT will be for 24-25. In terms of IFRS, which is, the new standard that is coming in, we expect ROEs of 19 to 20%. That is basically on the deferment of cost basis.
Okay, and you have planned and taken price hikes in FY24. Now tell us about the extent, timelines, and the potential impact that the portfolio has seen overall.
See, we had taken a price increase, so we are getting a good premium yield of 25%. The renewal of the portfolio is in line with our expectation. We're expecting some losses, the loss of business because of this, and that was built into the price increase. So it is exactly in line with our expectation. We continue to monitor all our portfolios. We plan to take price increase in our certain other portfolios, which is around 10%. And now with the inflation coming back to normalcy, the price increase will be close to 15%. This was a bigger price increase post-COVID that we had to take.
So price increase in FY25 is 15%. That's what you're saying?
Yeah, for 10% of our portfolio.
Okay, all right. And you've spoken about, risk first, growth later. And how are you strengthening your underwriting processes? One thing. If you can tell us more about how it has changed over the last quarters and where it is headed.
Yeah, so what we said is we'll focus on quality business, and that's the reason where we, with 16 years of experience, we know which areas are fraud prone. There is abuse and wastage that is happening. We have identified the portability business in certain categories was giving higher loss ratios. So we have abstained ourselves from writing those businesses. And that is where we have focused on quality business. What it has done is, it has led to a reduction in our rejections as well as grievances as well. So it is giving us huge benefits. The portfolio is now realigned. We started this process in April last year. It's typically 1-year policies. So from April onwards, we see that the base is set and we'll get a larger benefit out of it in terms of the overall growth rate as well as the loss issue and customer service initiatives.
Right, and the net earned interest in 9 months FY24 saw a 14% growth. Now, do you expect the growth to moderate in FY25 or it will sustain at the same rate?
So the investment yield continues to be very strong for us. With the rising interest rate, we have seen a good improvement in our portfolio. We have realigned our portfolio also, with investments in REITs, InvITs, quality papers. We see that it should not get impacted much.
Right. And what are the kind of expansion and growth plans that you're aiming at in FY25?
See, typically we have 4 levers. When it comes to agency business, we continue to add close to 80,000 to 90,000 agents. We have 7 lakhs plus agents, and this is our biggest channel, and it will continue to grow in line with the market. Digital and banca channels are the biggest growth driver for us. When it comes to digital channels, we are adding infrastructure in terms of telesales units, the spends on performance marketing. This business is growing at 35% plus. Today, it is around 8% of our overall business, growing faster than the overall growth rate. When it comes to bank assurance channels, we have 50 plus partners. And this again, the quality of the business is very good. 50% of the business comes through benefit, 50% to indemnity channels. It's a good profit making business. And the current year growth is around 35%. In terms of group business, we continue to focus on SME segment. What we have seen is the mid-market customers, there is an improvement in rates, and this again, business is doing well for us. So it's firing on all cylinders when it comes to health insurance business for us.
Right. And my last question to you would be that with regards to the new SAHI approval, what is the kind of markets and what is the competition scenario overall?
See, we look at the market on an overall basis. There are 30 plus players, and the regulator wants that new and newer players should come and expand the market. So with the kind of distribution and product segment that we are happy that, everyone is coming and expanding the market, and which helps a big player like Star Health.
Right. Well, Mr. Nilesh Kambli, thank you so much for speaking with us at NDTV Profit.